We're in Hong Kong as part of Consensus 2026, an event organized by CoinDesk. We used this opportunity to meet with one of the most influential leaders of the digital asset industry, Yat Siu, the co-founder of Animoca Brands. Animoca Brands is a digital assets conglomerate from Hong Kong, heavily invested in crypto or AI. Think about Kraken, OpenSea or Solana. Let's join our discussion with Yat Siu. Hi Yat, thank you for hosting us in your Hong Kong offices. Before talking about Animoca Brands, I would like maybe to introduce you. You have a fascinating story. You were born and raised in Austria. You lived in Hong Kong. Now I think that you're living in Vancouver. I don't know whether or not it's still
I live in Hong Kong.
Oh, you live in Hong Kong.
But I live on a plane, so yeah.
Would you mind sharing a bit of your personal background and what brought you to digital assets first?
Well, thank you for coming and welcome to Hong Kong.
I appreciate it.
I was born and raised in Austria, sort of a child of the 70s. So, I studied music because my parents were professional musicians, which is also the reason why I had to study music as an only child. But what's also interesting is that I grew up in the time, 70s and 80s was a very interesting political time. In some ways, I would say has similar echoes of today in terms of the political scenarios, right? But not quite as dramatic. And so I was right in Vienna, which was right in the middle between, what used to be sort of Eastern Europe, right, with the Iron Curtain, and of course Western Europe, and Vienna was right in that middle. And so kind of experiencing both of that, because my mom used to work at the Komische Oper in Berlin, and so I would sometimes visit her, and I would literally cross over to the border, and I would basically see what real communism looked like back in sort of DDR. And then, because of that, not knowing until much later, it would impact my work later, but of course it had an indelible impression on my ideas of basically sort of capitalism, socialism, perspective of ownership, right? These are all things that became very important to me, but I didn't really understand as a child seeing it, but it obviously had an impact. And then the other thing was, of course, technology. I wasn't a very gifted musician. In fact, I was probably average. And in music, when you are with basically talented musicians, you see the difference, I'm afraid. So I was never quite as good. I had to work really hard. And so music taught me more about discipline rather than necessarily creativity. But I used a computer back in the 80s, sort of mid-80s. This was an Atari ST, and they had a MIDI port. And what I did was I basically wrote one of the very first MIDI software on a cheap keyboard to help me compose music, because I thought it was very strange to write music with a pen and paper. Right? That's just also because I don't think this way. Some people can just do it. Basically, writing software helped me. My professor did not like it at all, because this was the 80s. At that point, you weren't even allowed to use calculators for math, never mind using a computer to help you compose music. However, I uploaded the software on a pre-internet service called CompuServe. And CompuServe was not yet on the internet, but essentially like a BBS internet type service. And there was different ones popping up in Europe all over the place. And then people downloaded the software and said, hey, I like this. And they started sending me money. And I was a teenager, and I received money in the mail that I could not deposit because I didn't have a bank account. But of course, back then, there was no PayPal, no crypto wallet, none of that type of stuff. And eventually, Atari contacted me and said, hey, we like your software. Would you like to sort of, come in? And I show up in a one-man office in Vienna, and I'm like this kid, and they're like, who are you? And there were a few revelations. I still got the opportunity. So I still, at first as a consultant, but ultimately ended up working for Atari for a little while. The opportunity was really, for me, that it didn't matter how old I was. It didn't matter that even though I was born and raised in Austria, that I was kind of a foreigner, right? The fact, today the world is a lot more multicultural.
Yeah, cosmopolitan. Yeah.
But more cosmopolitan, yes. But in the 80s, it wasn't bad, it was just weird. Right? And so opportunities for, let's call it, people who are not local was much harder. But when you're on the internet, and in CompuServe, you were a number. You weren't, your email address was a number. It wasn't even a name per se. People didn't even care. So it was just, what could you do? What was your capability? What was your ability? Do I like what you produce? Do you sound reasonable online, right? These were enough. And then I was able to create relationships and friendships and opportunities online with people I never met before. And of course, at that point, sort of online world was very, very small. But to me, that opened up that gateway of the possibilities that if I had stayed in Austria and I never went online, I would have never understood at the time. Today, we take it for granted. We take it completely for granted that you can talk to anyone in the world if you want to. This was not reality 30, 40 years ago. Like, it was impossible. Phone calls were expensive,
yeah, exactly.
right? You send mail. I used to do sort of, mail, and you would send it out to the world, right, to see who responds back, right?
It took weeks.
It took weeks to come back. Sometimes nothing comes back, right? It's like literally sending bottles, into the ocean and hoping something comes back, right? That was the world back then, right? That led me to America, and while I was obviously studying computer science, then Atari went under, and that's kind of where my real entrepreneurial journey started. Where ultimately we started writing software for, and creating a company that did virtual reality modeling tools, which was later acquired by SGI. And VRML is interesting because VRML was basically the HTML version of VR, but this was in '92. Okay, so back then the graphics were just really primitive. But again, the idea that we would be shopping online and that we would be living in the virtual metaverse of sorts, right? And that we would basically experience the world entirely digitally was already in people's minds in the early 90s. It just took 30 years more for it to actually turn into a reality in the way that we see today, in sort of gaming and goggles and all that kind of stuff, right? So I witnessed all that. Fast forward, started one of the very first ISPs in Hong Kong called Hong Kong Online, meaning that I witnessed basically the sort of first generation of the internet, really from the infrastructure layer, which is why, to me, what's happening in Web3 and crypto is so synonymous with what happens to the early internet, because I see all the same parallels, right? In the sort of 2009, we sold our messaging business to IBM, and that was really the birth time of Animoca Brands, because we were not allowed to do anything enterprise anymore. We had a gaming business, and then essentially sort of pivoted completely into making mobile games, had some success there, and then obviously in 2017 with CryptoKitties, we discovered NFTs, and we discovered how we could potentially disrupt back then the gaming industry. And of course, today, Animoca Brands is much more than that, but that was sort of our entry point into the world of crypto.
We're getting to that point. What is Animoca Brands?
So I think the best way to describe Animoca Brands is really we're a gateway to the utility tokens of Web3, right? I mean, some people call them altcoins, but I think the problem with altcoins is that altcoins include meme coins, altcoins include all sorts of things, right? So we want to focus very much on the utility tokens that actually provide service. I mean, stablecoins is part of that. There's a utility around that. And essentially, in a way, we've become probably one of the largest investors in Web3. We have over 628 portfolios today. I think it's not something that we thought we would have so many portfolios, but when I think about the early days of the internet, it's the same thing, right? I mean, do we know which one's going to be the next Amazon, the next Google? For those who remember the early search days, the number one search engine was called Yahoo, right? And the next ones were Magellan, Excite, Infoseek, Lycos, right? Google was nowhere to be found. However, if you had invested in all of them at equal amount of money, right, and you would just sit with them, then actually the returns on Google would have not just been your money back, it would have been absolutely exceptional returns over the life cycle. But we're not a fund, so we do it out of our balance sheet. So some people describe us as kind of like a SoftBank of crypto.
So you're playing optionality within the digital assets landscape.
Basically, it's not just digital asset landscape. It is digital assets because they express themselves as digital assets. But we think of crypto and blockchain as the whole new infrastructure for the new internet, which we often describe as Web3.
You told me a while ago that actually when you invest in a company, you don't plan any exit strategy. Is it still true? What's your business model?
Yeah, so the business model is we incubate companies, we do treasury management because we have a very sizable treasury. We can generate yield from the treasury, so it's all prop trading. And that basically has enabled us to be EBITDA positive for basically 4 or 5 years straight. Our revenues are typically in the hundreds of millions of dollars, but because our market is volatile, it can go like this, right? You know, especially the last couple of years, it's been very, very volatile, but we still managed to squeeze basically EBITDA profitability, essentially through treasury management. We also get returns from investments. I mean, even though we don't control necessarily the exit times, you know, because of the vast size of our portfolio, we basically are receiving exits from, opportunities both in equity and from the token side over time. That also contributes to it as well. We have amongst our investments many, many unicorns, thankfully, that are become very sizable positions. And it's not all in crypto. I mean, they're all projects that we aim to tokenize in some form or another. One of my favorite examples is Colossal. Colossal Biosciences is the one that basically restored the dire wolf, right? Famous for trying to restore the woolly mammoth, which I think they will succeed in doing. But when we invested in them in 2001, we're going to tokenize essentially their genetics data, because their genetics data is actually a very useful use case for blockchain. And that's why we made the investment. We invested in them, for instance, a $300 million basically seed round valuation. That sounds like crazy, right? And the last round, they basically just closed a couple of weeks ago at $10 billion, right? So there are opportunities around that as well, right? Of course, we're known for our investments in Axie Infinity, acquisition of Sandbox, OpenSea,
Kraken.
Polygon, Kraken, Ledger, French company, right? Those have all done very well as well, and some of them will have exits this year. Some of them had exits with tokens before. But generally speaking, we don't plan for there must be an exit this month or this year. We are basically pretty patient investors, and that's because we're not a fund. If you're a fund, then you're kind of forced to look at your fund life cycle. You have 8 years, 10 years, you have to return capital. And the way I think of this is that imagine if you were an investor in Amazon and Google and Facebook in 2005, okay? Public market, you're sitting on it, and you're a fund, 10 years. You would sell in 2015.
Yeah, not a good time.
You would make money, but not a good time. And the criticism, if you will, about what happened with SoftBank is, had they kept their Nvidia stake, I think they would be worth $1 trillion, right? And now SoftBank is worth only 180 billion. I mean, it's still a good number. What I'm just saying is that if you have conviction in something, you can play the long game. And if you're not a fund, right, then you can actually play the long game for real, right? And because there's so much value accrual that comes from it, you don't have to sell everything, right? And you don't have to hedge on everything. You can be long on the majority of the position, while you can basically manage the portfolio for just ensuring that you essentially are, operating the business. And so the way to look at Animoca is we're an index to that digital future, right? And if you're an investor, and the reason why we want to go public is that if you are basically wanting to have exposure to crypto and Web3, you're going to own some Bitcoin, you're going to own some Ethereum and Solana, right? But then you have to own everything else, which is today 35, 40% of the market. And we believe will be the majority of the market, because we think the altcoin economy is like the stock market and Bitcoin is like gold. And so today, compared to gold is $26, $27 trillion. Stock market is $128 trillion. And why? Because we use the companies in the stock market and we save in gold. And with crypto, it's the same. We use the altcoins, utility tokens, stablecoins, RWAs, and we save in Bitcoin. So they have very similar parallels in our mind. And so we think that right now it's flipped. Altcoins are collectively smaller than Bitcoin, but we believe altcoins are going to be collectively larger than Bitcoin. And whether you believe it or not, either you just have macro exposure to altcoins. For both of these reasons, we think we're the best company to have exposure to, because other investors don't have an opportunity to do this. If I'm a regular investor, I want to invest in maybe A16Z or Paradigm, very successful crypto investors. Good luck. They won't take your money. They won't take your $1,000. They won't take your $100. They won't even take your $1 million. $10 million, maybe they'll talk to you. $100 million, okay, let's talk. Who can do it, right? And so Animoca becomes also a much more democratized access to these opportunities.
It's funny you mentioned that, because we, CoinShares, we are a digital asset manager, and we have a new investment thesis right now, which we name hybrid finance, which is basically, long story short, convergence between traditional finance and public blockchains and public rails.
Yes.
How do you see Animoca in this new paradigm?
I think it's all coming together, right? Up until the last couple of years, the whole world of crypto and TradFi was very much moving in parallel, right? TradFi was there, crypto was coming in closer, but was never quite there. And then when ETFs came, essentially, I would argue that TradFi in some ways kind of is gobbling up crypto in a way, right? When you look at Bitcoin ETFs and who are all the major buyers of Bitcoin last year, it was mostly institutions, essentially through IBIT and various other ETFs. So the world is very much coming together in a big way. That means for companies like us, we have to become institutional as well. So we have our retail roots with our customers who use our products, and we have to respect that. But essentially, one of the reasons we are going public is because we have to also appeal and message and communicate to the institutional world. And what the institutional world is accountability, it needs transparency, it needs systems that they're familiar with, regulation, all these type of stuff. And I think there's no such thing as a large company in crypto that wasn't ultimately also going to be in the institutional era. Now, there are many ways to be institution. If you're a token, you could be an ETF. You don't have to be a listed company. You also have the DAT story, which is struggling a little bit. However, generally speaking, you could be an ETF or an ETP, right? But if you're an operating company, like an exchange, like a Coinbase, for instance, or in the future, maybe Kraken or Ledger, right? Then being public makes sense for you, because you're not going to tokenize something because you don't have a token, but you are an operating business that either holds assets or is operating in that space, right? And that's how we see ourselves with Animoca. So we see that very much as tying together. And if you're thinking about token projects as well, from a utility standpoint, much like the stock market, if you don't have institutional backing, it's going to be very hard to be big, right? And I think for tokens, it's exactly the same.
Market has changed a lot since 2017. I think the first time we met, it was in JTEX Dubai in 2022, and the market again has changed a lot since then. Do you have the same beliefs, convictions as before when it comes to crypto?
The conviction is the same, which is around stakeholder economies. The idea that we have ownership. To me, the fundamental of the purpose of blockchain and crypto is how do we create more collective ownership in everything that we do? And if you think about a better future as well, how do we make everyone become a capitalist? In my mind, the way we turn everyone into a capitalist is to make them a capital owner, right? But what is the problem we have in the world? We don't have capital owners. We live in a capitalist world where 10% owns the capital and 90% owns nothing. And then we act surprised that the 90% don't like it, yeah, right? So, and it's not just student loans and other stuff like that. It's just the fact that capitalism hasn't worked for them because we haven't found a way to include them. My parents' generation, if you were a taxi driver or a plumber, you could buy a house. You can be a PhD in a university and you cannot buy a house if you're in your 30s, right? So, and this is the problem we exist in today. And so we can't do this with real estate unless you have the revolution. I mean, there's many histories that point towards those kind of outcomes. So what's the paradigm? We think the paradigm is kind of like the new country, as it were. And the new country is digital ownership because we are spending all our time digitally. And the landlords that we have to basically negotiate or create sort of, let's call it disruptions on, are basically the big platforms, Facebook, Apple, Google, those guys. They're essentially all the platforms we're paying rent to. And I think blockchain is the answer to that. If you look at Ethereum and Bitcoin as really effectively the two largest blockchains in the world, and we may argue their purpose, but the point is that essentially the ownership layer is distributed. And every person who participated and helped contribute to the value of the network got to benefit from this. And that to me is basically what stakeholder ownership means. And when you look at blockchains, the ability to have 10 million or even 100 million stakeholders in one blockchain is possible. But you cannot have 100 million shareholders. It's just not, you're a public company. The management of even 10,000 shareholders is a nightmare, never mind 100,000, because of the system. It's just too old. You have to send a notice when you make a shareholder vote. You have to literally, we are a public company as well in Australia. We have to print stuff, okay, to send out. We would basically bankrupt ourselves if we have millions of shareholders to print the paper to send it to the shareholder, right? But on blockchain, through verifiability, through digital identity, through smart contracts, all of this stuff can happen seamlessly at literally fractions of a dollar. And so I think that's the future, and we're not just limited in knowledge around this, we're also limited in the ability to deliver. We were in Davos, we're at a panel, with Franklin Templeton, and Jenny Johnson, was sharing a very relevant story here. So they tokenized their mutual funds and their bonds, and she was sharing how the minimum price in TradFi was $500 because it cost several dollars for each transaction. But the tokenized version was a fraction of that, which meant that she could sell that same product now for $20 or less. And that's not just more opportunity and access, it also makes it more frictionless and seamless, right? All of these kind of approaches in technology actually benefit essentially a way in which we can create more ownership. In the same way that I can't afford a $500 investment, but I can afford a $10 or $20 investment, and I can begin to invest in the same kind of investments that maybe a person who is much wealthier than me can do as well. And that's what we talk about, democratized access, and that's where I think the world has to go. So to me, the concept of Web3 as essentially the web of ownership, that has been the same concept for us really since the beginning and remains this way. Now, there's a lot of people who talk about it as blockchain is only for financial purposes.
I wanted to address that. Recently, Lily Liu, president of Solana Foundation, told that...
we talked about that, and I responded to it, yes.
Companies should focus on finance and not gaming. You used to be known as a gaming company.
Yes, yeah, so, yeah. Felt personal. So and I know Lily well, and I know exactly where she's coming from the perspective. And frankly, if you're Solana, I get it, right? Her focus, internet capital markets, if it is true that, the purpose of blockchain is only financial, then Solana has a very natural advantage to that story, right? So I understand why she's saying that. I also understand why it looks this way, because when you have ownership, the financial expression is the very first form in which you express it as. Because if I have ownership, what can I do? I could sell it if I want to. I could trade it. There is value attached. So there's a financial expression. But to me, the financial expression is the effect of ownership. It's not because it's financial we have ownership. It's the other way around. It's ownership that gives us financial value, but so much more, right? When I have ownership, it expresses my identity. It is something that shows who I am. Where I choose to live is not just about, do you buy a house just because it's worth a lot of money? It's part of your thinking. You think it's a good investment, but you also buy the house because your community is there, because your family is there, because it's the country that you love, right? I mean, how many people choose to live in France because they love France, not because they love the taxes, right? I mean, if it's purely financial and economic, every French person would probably move to Dubai. I mean, as an example, right? So we're not like that as humans, right? And my objection to this, which I wrote about, was that blockchain lays the foundation of ownership, which is a very fundamental human thing. And if we reduce the idea that blockchain as this future internet is only about financial, then we give a disservice to what the potential of blockchain is. Because one, humans don't express themselves purely financially only, because for most of us, and this is a difference about people in Wall Street and finance, and for people who are not, money is not our end. So money is a means to an end. The good life, for instance, money will help us get there, but we don't live for money itself. But there's a small percentage of the world where money is the final means, because it's power, it's status within their circle. Most of them work in Wall Street, and many of them have moved to crypto. And so I do think we're getting this confirmation bias because we're in a world where most people care about money. Like you go to talk to someone in Wall Street, money for them, the sake of making money is more important. But you talk to the 99% of the world, and they're like, I live in a good house, I'm happy, I have my kids, I'm happy, I choose to live here, not because I want to make money, but because I'm happy, right? So that's, I think, what's innately human about us, right? And the solve around this is ownership. So it's very much about a sort of a future where we can have essentially an ownership stake in everything that we do. And humans are not purely financial engines.
All right. To be a bit more specific and maybe more related to Animoca Brands product, do you still see a future for the sandbox ecosystem, the sandbox gaming, the Altcoin ecosystem as well?
Yes. Yeah. So I see a future in all of it. I think the challenge that we've seen is where the value was and where the value is today. So let me put it this way. When Sandbox had an FDV of, I think, $16 billion, do we think that was fair in 21? Okay. And I'm not saying that the market didn't have exuberance excessively per se. I'm just saying that there was a case where the market had high expectations where it was, but all the public statistics was very, very clear that it didn't underlie the fundamentals at that moment in time, right? So now you have many other game companies out there that have token projects, not even Sandbox. In our portfolio, maybe 50 million market cap, 30 million market cap, right? Some have gone away, right? Some have hundreds of millions of market cap, right? When your entry price as an investor is 5 or 10 million, that's a good outcome. When you think about classic gaming, right? Most gaming studios, when they sell for under 50 million. And most fundraising is under 5 million valuation, maybe 10 million, they raise 1 or 2. If you're building a big studio game, sure, it's bigger, right? But generally, indie studios do not raise $50 million seed round valuation, right? They raise at sub $10 million, sometimes sub $5 million, right? And that just means that the market has become more balanced and more healthy. So investors are seeking their 5 or 10x returns. It's just about entry price. If your entry price is 5 million valuation or 10 million valuation, and you happen to have a 50 million exit, great, okay? And that's what happened, by the way, in 2018. We invested in our opening valuation for OpenSea was 15 million US. Axie Infinity was 8 million US. And we bought Sandbox for 4.5 million US. Those were fair valuations. People say, what a great deal, but they were fair valuations for the company they're in today. And now we're back into this point where we're investing in companies at 5 million, 8 million, 10 million valuations. And whether they become a billion or whether they become 50 to 100 doesn't matter, right? So I think you pick your time. People like saying Bitcoin, it was 120, now look at 70. Did you look 3 years ago? Did you look 5 years ago? We entered in 2018, in I think December 2018, Bitcoin was $3,000, right? So it's about the entry point. It doesn't invalidate the market. It's just, is the market value right for that moment in time? And because we have many more tokens and many more choices, the market has become much more real. So in other words, I think ApeCoin and Sandbox is undervalued, but do I think it's valued 100x from here? I don't think so. Unless they bring 100x more users. That's a different story. Now we can measure that based on chain activity or TVL, for instance. That's all this means, right? And so if your entry point remains low and you're coming in, your value on tokens still is a return to investors. It's just, instead of having 1 or 2 deals that are billions of dollars, you have 100 deals that are $50 million. I'm okay with that, right? And that's actually how the normal world works. I mean, sometimes you get just covered by the sort of, AI stories. And I mean, Jan LeCun's new startup, Ami Labs, it's a $3 billion valuation, I think, or something like that, right? And you look at that and you say, that's impressive and maybe it's deserved. But that is not normal, okay? Most startups, even in AI, are in the tens of millions of dollars, and that's where the opportunities are.
I just wanted to end with that question. What is money to you, Yat?
Money to me?
Yeah.
Money to me, I mean, fundamentally, it's a social system. I think of money as probably the OG social system, because it is, of course, representative of more than just sort of, the ability to transact and the store of value somewhat, right? It's also a representation of power. If you have a lot of money, you have power and that kind of stuff. But to me, it's a social system. Money to me is the perfect icebreaker. I can do business and I could do transactions with the stranger in the world. I can go to a local bakery. I don't know who you are, but because I have money, I can begin a transaction with you and I can buy something with you. And this process of buying is our beginning of our relationship, whether it's just a relationship to buy or something else. And I think this is where this part of the world, which is more capitalist, especially Hong Kong and of course Dubai, we make friendships over money, right? We do business and then we become friends. This is not very European, right? And I think this is the contrast between the relationships also with entrepreneurship and capitalism and of course crypto, because they're all tied together. Which is why I think Europe has a disadvantage right now, unfortunately, because their relationship with money, they don't view it in a social construct. They view it in a power construct, right? Purely in a power way, which means that if you have too much money, you have too much power. And I don't like that. And we have to structure it this way. And it's something that you have to be afraid of, rather than thinking of it as essentially its ultimate social engine. If we didn't have money in the earliest of days, whether it's seashells or whether it's gold or whether it's some kind of coin, we wouldn't have global commerce. We wouldn't have trade. We wouldn't have relationships, right? That's why I would describe money as the OG social system.
Thank you, Yat.
Thank you so much. Yeah.